Corporate regulators in the United States are examining ways to deal with a recent spate of accounting scandals at US-listed companies based in China. In a number of high-profile cases, the auditors have resigned after the foreign companies were found to have engaged in accounting fraud. The offshore firms have often used reverse mergers to gain access to the US market. So-called backdoor listings are also common here in Australia, and the problems in the US have prompted questions about the strength of domestic regulations. Rebecca Hyam reports.
For private companies, a share market listing is a big decision and a major milestone. While an initial public offering is the most common path, a reverse takeover or backdoor listing provides an alternative route. This process sees a private company approach an often dormant, publicly listed firm known as a shell company because all that exists of the original company is its organisational structure. The private company offers itself up for sale to the public company in exchange for the listed entity's shares. By the end of the transaction, the private firm effectively gains control of the public company, often changing the name and restructuring with a new board of directors and management team. In the United States, this process can take a matter of weeks and is considered a much cheaper option than an IPO. Since 2004, more than 350 Chinese companies have obtained US listings using backdoor registrations. One of those was China Media Express, a firm providing advertising on Chinese buses, which reverse merged its way onto the Nasdaq in 2009. Earlier this year, its auditor, Deloitte, resigned because it had lost confidence in the company's financial reporting, raising concerns about undisclosed loans, the authenticity of bank statements, and suggesting China Media Express had grossly inflated its customer numbers. In Australia, the local share market operator says backdoor listings currently account for about 10 to 15% of all listings.
In calendar 2010, we had 126 front door listings and 15 backdoor listings. Year to date, this calendar year, we've had 74 front door listings and 12 backdoor listings.
And companies seeking to reverse merge their way onto the Australian exchange have to measure up to some stringent standards, including a minimum number of shareholders, satisfying assets or profit tests, and providing a prospectus or product disclosure statement.
Effectively, backdoor listings in Australia are required to go through the same processes as somebody listing through the front door. So I think in terms of comparative measures, I think we stand up very well against other jurisdictions.
The international law firm Baker & McKenzie deals with corporate mergers and acquisitions and says, unlike the United States and some other jurisdictions, backdoor listings in Australia can often be lengthy and complicated.
In some circumstances it does work, but in a lot of circumstances it's actually a bit more time-consuming and more expensive than a front door listing.
For the most part in Australia, backdoor listings have been linked to the resources sector, and some analysts suggest that with the growing appetite in China for Australian mining interests, there could be a rise in this type of transaction. But while it's possible for foreign companies to gain access to the local stock market via backdoor listings, it's not considered an easy option.
In addition, then, there'll be further regulation. They'd probably be regulated by the Foreign Investment Review Board as well. So it's just extra hurdles and extra oversight.
It would make sense, I think, for us to see more Chinese entities or entities that have Chinese businesses listing on the Australian exchange because of that close economic tie between our regions. But in terms of it happening by way of backdoor listing and us having the same sorts of issues that have been experienced in other jurisdictions, I think it's highly unlikely.
And with Chinese accounting standards not recognised in Australia, regulators and the market operators say it's also unlikely the accounting scandals hitting the US will find their way here.